Hey everybody, welcome back to our swing trading class. My name is Mike Fairborn. Great to be back with you all. Look forward to our discussion each and every week. And we're going to start opening things up a little bit more to options. There may be some opportunities there across a whole basket of strategies, that fit so well within that swing trade time frame. Maybe a little bit less, maybe a little bit more, but really in many cases right smack dab in that middle of 14 days or so. So I'm looking forward to going through that. There are some interesting setups that we're seeing in the market right now. I want to talk about a few that we looked at last week as well and break those down too. Good to have you with us. As I mentioned, hello to you, Joe. We've got High Speed Kelly, Jack, Sharon, Jay Richardson, Will. Yeah, did hit some trails this weekend, Will. Absolutely. It's a great time of the year. The fall change of seasons are really about almost, that kind of seasonal time frame is about 8 months in Utah here, at least in my neck of the woods. That's northern Utah. Cam's in the same place as well. But aloha to you, Scott, as well as BJ. Good to have you here. And Kevin Baker. Riceberg and Jason, good to have you guys here as well. I'm joining the chat, as I mentioned, by a good friend, colleague of mine, Mr. Cameron May, very experienced in the market, as many of you already know. You can follow him too on X, Cameron May CS, Mike Fairborn CS. He has done us the favor of posting that, pinned it to the top of the chat box. If you're not already joining us, love to have you on board there joining us. So with that, though, let's turn over to some disclosures so we can get rolling here. Information here is for general information purposes only, should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk. They're not suitable for all investors. I want you to be mindful of that for sure. Some additional points there on that disclosure listed, as you can see. Specific securities used to demonstrate analysis of trading functionality were selected randomly. We are looking, though, at different techniques that traders might be looking at. We'll review those in a paper money account. The paper money software application is for educational purposes only. Now, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option has a higher risk of being assigned early. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Vesting involves risk, including the loss of principal. There's no guarantee that the execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results. And as we talk about frequently, we'll look at it again today, dividends are not guaranteed for those dividend-paying stocks out there. Finally, a quick glance over here at some of the futures and wanted to state, the futures of futures options trading does involve substantial risk, not super for all investors. We just look at the charts here from time to time. They are quite useful. With that, though, let's dive into our discussion. Welcome to those of you just joining us right now. Good to have you all here. Okay, well, let's go ahead and take a look at our markets right now. We're still staying within this ascending triangle. It's not the first time that we've seen this ascending triangle, as you can see over here on the charts. Let me get my drawing tool up. Yeah, so we've got one kind of right in this range here. You can see it within our two lines, getting a little bit tighter here. We've got another one. Now, the first time we broke out above there and extended higher, almost like one of the trades that we take in this class in terms of a swing trade, where we're really just looking at, this movement right there. We're just looking for that upside move, 3 to 14 days, and really just trying to, in many ways, just find that area of the market within individual stocks, that is, where prices are just set to maybe bounce in the direction of the trend upside or to the downside. Here we are fast forwarding to the present. You can see we're getting very close to that upper channel. Now, sometimes those can just represent resistance, but if we begin to break up above there, we may extend higher, which could be interesting, and it could be a bullish indication for the markets. I like to throw this out, you guys. I do it to a fault sometimes, but I only do it during interesting seasonal month time frames. September happens to be one of those interesting seasonal months, as you can see below here. That is September. 5-year, 10-year, 20-year. You're going to get something very, very quite similar to that. What have we seen thus far? Well, we paused a little bit here. You know what? Let's do this. Let's just make them comparable, and then I promise we're going to jump right on into the swing trades. But I do like to show these when they are relevant. We'll use price as a percentage and bring those 5 years up to a more current time frame. So much easier to compare the two. We're looking at in that light blue color, or cyan as they call it. That is today's action, or this year, this year's action, whereas the red line is the average of the S&P. And you can see we did drag a little bit. We have yet to fall. We don't know if we will fall. That's just the average. Some years do break up higher. Some years do break down even lower, and some years just go flat. But if it does fall into a seasonal sort of a pattern, well, we could begin any time to kind of pull back lower. And what is interesting too, I have to say, is the beginning of October seasonally, because that has spelled really a good solid run to the end of the year on average. There's the word I use again. It's made up of time frames that are up and down, but hey, that's what it's on average it looks like. In many of those years, folks do fall into an average kind of a visual time frame, as we go through it. All right, did anybody here listen to the Apple event? Hello to you, Jay Richardson, as well as Debbie joining us. Good to have you here. The Apple event was on today. It was kind of fascinating. They talked about a number of different features. We had highlighted this paper trade example a little bit ago. We're still in the trade. The event was interesting. It was intriguing. There was a lot of new details about Apple and different setups. I think the highlight here was the iPhone Air is basically what they're going to be. That's kind of the new sort of product, and completely new, strong, etc., and all these different things. But we'll see how that unfolds. Right now, this was the flag pattern. We're still in it. It's up about $800 or so right now on average. Let me get us back to the. If you flip and you do that comparable time frame, even though you're not on it still, you know what you have to do? You got to come back and, oh, I was still on it. Take it off so we can see our numbers over here. So we got into a flag pattern approximately right over here on that potential flag pattern. We can actually say that it has unfolded as a flag pattern, just reviewing a prior trade from a couple of weeks ago, and that is the trade coming up. You could see us breaking higher. We did hit our T1 target, which is one of the key targets that we look at in this class. We actually gapped right above it. That's T1. T1 takes us back to the prior high, and T2 is noted up here where we already have that target in place. That's the full extension. Now, that's the one that the real, sort of those that are a bit more bullish would take the trade on. It's not to say that people can't take some of the money off at a T1 and maybe trade to a T2 if it unfolds that way to the upside. But this is that extension right here. So we take this price range, measure it off the bottom, and there you go. So that's what we elected to do with just a 100 share trade, a full round lot, just one round lot there. But it's still pretty much steady as she goes. Prices have been going up, higher highs, higher lows. It's pulled back a little bit. The original stop that we had in down below this point, what I'm going to do right now, and what we'll oftentimes do is when you make new highs, you just pull it up, like we made a new high right here. We just pull up our stop level right there. Let's see, is that going to do it? Yeah, well, just below that line. Sorry, a little bit less. Just below that last low where we had it. And that's how you can kind of inch it up. The other thing we said too, for potential exit level, is to put on a 20 or 30-day moving average or whatever, and if prices cross below that, well, then you could also exit that trade. So it kind of depends, but I will state this right now, and I'm not trying to defend this trade, but just to show you what's on the chart here, we may be staircasing higher. We don't know where we're going to end on the day. Still got about a little bit less than an hour left to go, but you notice right there, we're right on the prior high. And sometimes, yeah, we've talked about this before. It's not too uncommon at all just to see us come right back down to that level and then bounce higher, staircase. A lot, that's a very, very common sort of a trend that you'll see, resting on prior highs and bouncing. It's held there today. So we'll see what does unfold. But yeah, if you get a chance to, if you're interested in some of the Apple products, that was out today, and that was part of our trade. We were wondering how that might influence us to the upside. Actually, people actually sold a little bit before that news, but it may be holding here, and will that be enough to push us up? Some of those, the new product, or definitely some enhancements along some of their products, because I did tune into it before our class today just to pick up on it. But yeah. So will it be enough? We don't know. That remains in question, but there you have it. Okay. How did you get the T2? Jack, this is how we did the T2. I'll give you a visual of that. We went right over here. A good quick way to do it, to do the measurement. We do actually have a Fibonacci tool, a Fibonacci retracement tool right down here at the bottom. I'm just going to highlight it. It's kind of tricky to find. It's right just to the right of the magnifying glass and I guess to the left of where it says drawing set. You want to click down there to get the tool. Quickest way to get it, go to the Fibonacci retracements and then go to one to the right. And all we're doing here is we're using the standard flag formation, right? The one, by the way, the one that we've talked about at length in this topic right here, in one of these slides that we oftentimes will go through. This is the slide deck, the move up, there's the flag kind of formation, and we're measuring this, the pull of the flag off the pull of the flag, this is the upward move, off the bottom of the flag formation, and then that same distance. So quick visual there, hopping back to our charts so you can see that. Where does that fall in at? Well, if we use this drawing tool right there, it's referred to as the extensions. So remember, not Fibonacci retracements, but extensions. A quick way you can do it is you pull up this tool up. I'm going to zoom in. You click at the bottom because we're measuring the move of the run, this price pattern, up to the top. Click the second time, and then all you want to do is click one more time, a third time right there, right at the bottom, and there you go. So that gives us all those retracement levels. Where's our 100? You notice we put our, this is a lot of times what we'll do. We might put the potential exit level just below the 100. And what that 100 means is it's just 100% of this same move measured off of that bottom right there. Okay, that's all we're measuring. That's the flag formation. The flag formation, the target, I should say, of a flag formation. If it were to hit the T, again, like you mentioned, that's the T2. T1, real easy. It's just the top of the move. But just to clarify, want to make sure we got that. All right, sweet. All right, I'm going to go ahead and take it off. Because if I got a lot of lines, we can't see too much, but just so you know, yeah, it's right near that. Sometimes it'll bounce, it'll come down right before it's the 100 target. So you can watch it carefully, or you can maybe try to take the trade off before that. We've elected just to put it in just below that 100. All right, another one we did just recently was ORLY, O'Reilly Automotive, and we talked about this company. It was such an expensive stock not too long ago, and then they did this massive 15-to-1 split. Yeah, this was in the thousands. The high, I mean, it was in the thousands. We'll just say that. And put it back down into a range that we were looking at. And here again, you guys, we talked about this. That is the flag pattern right there. See the flag move up? We put the trade on. We're coming out of that flag right now a little bit. Only 50 shares. What do we have on this one thus far? Oh, there was another 100 in there at some point. Okay. I've only got a stop in there at 50 right now. It's doing actually pretty well from the 150 position on it. That may have been an early one. I think on this one we just did no, we did let's see, I think we did 100. Oh, anyhow, I'll have to go back and take a look at it specifically. I know there was a 50 contract or 50 share entry in there, but you guys are getting the idea. And you notice what we did too on this? We did the same target. So this was a T, it already hit the T1 target. There is the T2. It's just still kind of developing. It's one that hasn't really been impacted by a lot of negative, I mean, any sort of negative news in the market. Really hasn't done too much on it. It's really kind of held this range and yeah, continued higher. Just a quick note too. Maybe some volume accumulation noted by the money flow down there. You like to see that holding strong. Just as prices are holding strong too. You don't want to see a lot of sellers is what you don't want to see. And in this case, I don't think we're seeing the sellers. We might be seeing maybe just potentially accumulation, which is a positive. All else that would be a positive, according to the indicator, that is, for the potential to run up to our target range over there. Okay. All right, sorry about the share differentials there. I can at least say I know we did 50 for sure over here, and that is the target to the, again, the T2 level. All right, believe it or not, we did remember, just have to remind you, we did a trade a while back on Tesla. Do you remember this? And we took half off the table, off our Tesla trade. And it's a triangle, and it's interesting because the triangle has broken to the upside. We had the breakout of the upside, but let me just tell you, it hasn't done much else. It's still actually, the triangles just kind of like these zigzags all over. It does have an upward zigzag directional kind of a move after it broke. Notice it. Now, let's do this. It broke, and then it comes right back down and holds that upper downward sloping trend line, which oftentimes it will do on the triangle, right at what we refer to as is the apex of the triangle. That's where those two trend lines converge, and a lot of times you'll get the breakout at or before the apex. We got it before, but notice it held right at the apex. It's fascinating because you're getting diagonal support from the upper trend line and the lower trend line, and that they converge at that same point, and sometimes that's exactly where you're going to get your bounce. We put our stop right there, and we said we just don't think, it might not move below that. That's the way some traders will do it. And as you can see there, that double support still within that range. It did do this. I mean, we got a bounce. We made a higher high. We got a higher low. We got another slightly higher high, and we're still at a higher low, but still zigzagging. How long is Tesla going to zigzag? My gosh. Well, it's June, at least in terms of the longer term triangle, but it's still kind of steady as she goes because we are making higher highs and higher lows, and that's a positive. The one thing we're going to do though on this, and I know these are just small incremental changes. I mean, these are teeny, but we make a new high over here from here? We did. And so we can therefore adjust that potential exit level in the form of the stop right below the next higher low is how we're going to do this. And there you go. So we're still raising that up, maybe capturing, some additional, possibly some additional profitability instead of maybe having a wider stop. So there you go. And by the way, if it flags again, which has been known to do so many times, and we break higher, where do we move that stop up to? If we're using this approach, could be moved right up there. And that's a significantly higher jump. And now, finally, we're really starting to lock in. Possibly, if we get an exit near that level, if it triggers, we get out close to that stop level, then it could be interesting to the upside. Okay, maybe it just continues up, but maybe a way to help us to lock in some of those profits by raising that stop up. All right. Well, by the way, this is interesting too. I don't know if you guys caught this. Remember, we played T-Mobile quite a bit, right? We played T-Mobile. There were a number of flags on T-Mobile. We played Verizon as well. We were not in here during that. I'm glad we weren't. This is actually, this is a SpaceX buying some of it was $17 billion in wireless spectrum licenses from EchoStar. It's to help them kind of broaden their wireless capabilities, those network capabilities through the satellite system they've got at SpaceX. Anyways, it's really quite fascinating, but I'm very glad we missed that. I'm just curious, did anybody see that on their radar? That's the thing I always wonder. As we trade these, it would have been nice to know that, oh yeah, if SpaceX buys these licensing, from EchoStar, hey, you might avoid, it's just good to be mindful that could happen, but I had no idea. We'd already actually traded, a swing trade over here. I think it was here. I know the Verizon one was a little bit earlier. I think we might still have our lines on it too. Yeah, oh gosh, it was earlier. Well, we did one earlier this year, and I think we did another one too. But we had the Verizon one, but Verizon took a dip as well. Not nearly as much as T-Mobile, but it is interesting just to think about what is out there. What can happen. Did anybody see that happening? It's just kind of nuts. It's just like, hey, what might occur at that point in time. So I want to throw that out there to you. All right, well, let's move on. Onto some new trades today and really utilizing some of the option strategies that we have available within this time frame that are so frequently used, 3 to 14 days. Take a look at this company. So Cadence Design Systems. This too has had a series of, and I know we look at the bull flags quite a bit, but you can see over here, that's kind of a sharper flag down, but it did kind of bounce up and flag kind of not more nicer right there, just easier to see. You got another one right there. And this is really kind of a longer term one. And sometimes you'll get those longer term ones after a gap from earnings. It just might take time for prices to just, come back down to earth because it was a big gap. Who knows? But we're starting to come back up now. Clearly, we had a hold, a close above the high, the low day, and we began to break above a range over here. Now, I do need to zoom in. I do like the context of like a larger time frame, but I'm going to stick to the 6 months today on many of these. I always encourage you to go out further and look at a longer term trend too. But can you see now a little bit easier? There were a couple of key highs right in there. I'll even put this one in here and this one too. We took those out. That was a key level of resistance. It was almost like the 50% Fibonacci level, actually. And we broke up above that level. But have we gone up too far already? Some might think that they did. Some people like to get the bottoms or very close to it, like the hold. Some might want to wait for a pullback and a hold of the support and then another bounce. So there are a few ways to look at this, but one thing potentially we could do is maybe a bull call spread, because as we've been looking at so many of these prices, they're not cheap. They're in the 300 range, and we've been kind of narrowing things down a little bit, haven't we? We've gone to, I think we did a 75 share, 50 share. I think we've done a 25 share, and one of the more expensive ones from time to time, we'll do that. But why don't we look at the bull call spread and break that down and see what that might look like? Maybe, putting on a call position, buying a call and selling a call, taking a little bit, reducing the price of the cost of the call when we sell the higher call, but then at the same time, taking a little bit off the top too. Maybe we wouldn't have nearly the profit potential if we're selling a call as well on that trade. It would kind of sort of put a barrier there in for the profitability on the long call. But even on a trade like this, what are we looking at in terms of, just if we thought it might at least make a move up to, I don't know, 175, 180. Maybe it's in a longer term flag. It might be stronger, but here's a consideration if we wanted to look at it. So let's go into the trade tab right now. Let's look at the October, monthly October's first. And what I wanted to state is that goes out 38 days. Now it's kind of far out in time, but that flag pattern could extend a little bit longer. I realize it could be towards the longer end of the time frame, and I've often said that swing trades could be, almost always 3 to 14 days, but sometimes at least within a month's time frame. So we're giving it like an additional month out there on top of our current month, roughly, close to 40 days time frame. But anyways, if we look at this, we're on the calls, and if we were to look at something like a 370, so it's out of the money, buying the 370, selling the 375 over here on the calls. Now, what does that look like? What does that do for us here? Well, there's quite a bit of time. We'll do another time comparison here in just a second. But if we bought the 370, and what I like to do is just hold the control button down on the keyboard, and it's command function if you're on a Mac, but now we're going to go to the bid, and that's where we're going to be selling the 375. Notice the debit is 170. Now, that's not a 5 wide. It's out of the money a little bit, but it would cost us this. And let's just pull it up right now and see what, under the dialog box, what this looks like. So you're looking at a max profit of 330. So, but that's where it, it caps out at. That's the max profit there. The cost is 170. Okay. Now, how does that compare to a round lot on the stock itself? If we were just to go over here and buy the stock, that's expensive. Well, that's about 18. The margin requirement's about $18,000. Let's go back to our long call spread or bull call spread, and we'll just take a look at it right there. What is this? Well, it's going to be the amount of our debit, 170. Quite the difference, right? Now, a trader might employ a strategy like this because on that flag pattern, which is really kind of long and extensive, it's kind of gotten moving here. We don't know if it's going to be like a strong move, and those that did might look more for like a stock trade, possibly, a direct, just something with a lot of strength. Well, a stock trade getting more maybe bang for the buck in terms of just dollar for dollar. It's up a point, you're getting $100 or whatever, up or down, but maybe stock for more strength. But over here, if the expectation was, well, here's kind of the pullback. It's September. We talked about seasonality. We're still stuck in that ascending triangle. What if it went something like this? Just real slow over here. Could still be fine for a trade that we're looking at. However, let's just do one additional comparison. What would it cost us if we knocked off a little bit of time here? What does that reward risk look like? If we go to I don't know, knock off 7 days. We'll use the end of October. Well, not the end of October. That would be the end of October right there. But the 31 days till expiration. It's an October weekly, just ahead of the monthly expiration. Same time frames. Look at this. Oh, it is cheaper. Okay, so if we knocked off a little bit of time, because we're going to be expecting it to move now, click, pull it down, and click here to the bid. Now, the other one was 170 debit. That is actually, did I do anything wrong there? No, that's actually, oh, okay, it just changed. 115. It adjusted to what we were just looking at. I was going back and forth. That's weird. I don't know what's going on there. Oh, they widened this out kind of towards the end. That's strange. Oh, the volumes aren't good. Forget it. Okay. Previously, it was interesting, but the volumes over on the other monthly were much better. Let's just do that. Let's look at the monthly here. Another good reason to maybe look at the monthly. Some of the options. Now, the volume's actually not that high, too. It's actually not that high. Wow. Huh. I want to put it on anyways. It's a good example trade that we can look at. The next one we'll be looking at does not fall into that realm. It's got more volume for sure. But I'm going to go ahead and click on this so we can see, and there you go. Maximum 320, 180 in terms of the max loss, maximum profit versus maximum loss. We'll send that through, but that is a key thing to note too. Now, this one over here is totally different in terms of volume. This is Intel, okay? Now, interesting too, because you've got a breakout above a range. There are a couple of things I want to show you on this too that might make this pattern actually even maybe more intriguing to some of the technical traders out there. Look at this. Here we are in this range. You notice this is kind of a triangle, but you could also say this is known as a pennant pattern. Could be known as a pennant. And that's the pennant right there. But it's very similar to a flag. Actually, it's like a triangle with going on within there. Trade. If I back this out to a 1 year, you know what you're seeing over here? This is the longer term consolidation. That's our weekly real quick. We're looking at this down here. This could be the beginning of a longer term bottom on Intel. I know there was some news, don't quote me on this, but it was something with the Trump administration about Intel. I don't know. You'd have to look into it. But looking at the stock itself, just coming back and looking at that daily chart, we're holding above the prior highs here. And you'll notice, what does that mean? You're holding above the prior highs. We must be getting a higher low. And we currently are, because we're holding above those highs. Now we're in a sideways channel here. Now the expectation is could we break out? Could we hold there for a little bit longer? Sometimes they do go into a little bit of a sideways range. And so what I wanted to do was really put a poll out here and see where you guys are, because I'm interested to see where you guys are at, and then we'll do the trade on the poll. But the poll would be we'd be looking at something like because let's say somebody was bought in on this stock, and maybe they said, hey, down here there's like a 22 range. Notice down here the 22, there's a lot of potential support. It's kind of like a 50% pullback range. There are a number of highs all the way. Wow, even over here. Didn't even see that here, through here, and there's your gap. Could be through here as well, but right around 22. What if we either sold a put down here, which we talked about in our disclosures a little bit? It does risk purchasing the shares, but somebody might say, Mike, I'm still convinced it could be strong, in terms of the stock, but it's still, we're looking at it as a swing trade. We're saying we want to collect that credit as prices are going up. So you can, a couple of different things to look at on the short put. first of all, short puts or short options could be assigned at any time. But if it were to go down here, and I'm not going to position it that way, but if somebody was long, they could say, I'm buying, maybe I try to buy it cheaper and get a premium to do so. We'll look at that premium in a second. Or they could just be saying this: I think it's going to hold within here, but if it doesn't, I'm happy to try to close out that short put, as prices might, or as over time, we're just still maybe going sideways. And maybe I want to try to collect from that put some time decay in the form of potential premium you're collecting, right? You're collecting that time decay over a period of time, and you might be looking for that. That's the first option. Second option, so easy. We just buy the stock here. We put an exit below the level, the last low here, and our expectation is that Intel will hold that support level, which it is below. If we're looking at this last low, we're looking at that support level at 24. We could put it just a little bit below there, for example. We'll look at a 1 ATR on this too. But the stock itself could position us for what? Okay, the target of this possible flag pattern. The target right there. See that? Right there? The target. So we measured this move from here to here. I'm just going to eyeball it just for the sake of simplicity and time here. But it would be maybe somewhere up here. And that would get us above this long-term range, which also could mean that we might be breaking out above a measured move range, and we might extend even higher, question mark, as well. There could be a longer sort of pattern at play here. But right now, we're just saying this is interesting because, somebody's looking at this, let's just say, and here's that upper resistance level. What's been happening there? Take a look. We come close to it, we dip down. We come close to it, we dip down. Close to it, dip down. Come close to it, flag. We flag. Okay. Maybe this is in line with the expectation of that news that I mentioned earlier unfolding, maybe a bigger move, but that could be, some indication that, it's different from what we'd seen previously, at least for now. So we're going to poll this here. I'm just going to say, type it in here. Okay. So you guys, if you can vote, that would be fantastic. Would really appreciate it. It gives us a better sense of what we do. I just said for an Intel trade, do we do the short put or do we buy the stock on this trade right now? So let's see how that unfolds and we'll go from there. Hey, and by the way, whatever happens, if you want to do a paper trade on it, you can do it either way. But I did want to take the trade in accordance to what the class is looking to do here. Okay, so I'll give that just a moment. And while you're hitting that too, hit something else. If you're finding value from this presentation, and I'd love to see it. If you like it, smash that like button. Helps the algorithm for these classes as well, so that it can perform a little bit better, relatively speaking. But you gotta like the class, so I get that. Also, encourage you to subscribe to our channel as well. That is Trader Talks, the Trader Talks channel. Love to have you on board. Many of you already are, and it's great to have you here. This is our channel. It would say subscribe right there. You can also, just bottom right-hand corner of your screen, a little subscribe button just above bottom right-hand corner of the video. You can subscribe if you're not already subscribed. So, yeah, a quick note too, like in last week's class, by the way, the week before actually, here is our swing trade. There was a bunch of playlists in here from a number of different coaches. This happens to be our swing trade class. I didn't mean to hit that one. I want to go over here and just hit, let's see, the playlist. Yeah, you got to hit the playlist and you get a bunch up in here. Cam did one for me. I did one last week. The one prior where we used upcoming news events, that was our Apple trade. If you want to get more details on how traders might use that, or last week, we really talked about direction and breakout indicators for swing trades as well. So a lot of times we will tie in indicators. Today, it's really around options and a lot of price action, a lot of price patterns. But I'll go ahead and put this into the chat if that's something you want to take a look at. Maybe you've already seen this before. There is the playlist as well. But yeah, here we go. So here is that link. And if you want to take a look at that, here is the playlist too. I think many of you know about these playlists in there, but yeah. So put this in here. Oh, I see. That was the play. So, all right, let's do that one more time. Playlist and copy. There we go. I was almost going to paste it again. Okay, playlist. All right, let's continue on. So how did our poll do? There's that playlist. The class was just above it. I'm going to go ahead and click on end that poll. Okay, we're going to do the short put. We are going to do another option trade. All right, and by the way, here too, quick note. Because the short put gives us maybe some flexibility, and we'll look at that right now, but if it gives us some flexibility in terms of maybe there's a little bit of a range down here, a little bit of a buffer zone for prices to move within before before it gets down to those levels, uh, and you're trying to, maybe burn some time decay in there too. Maybe the trade hasn't confirmed very much for us yet. So I know some traders, they might start off the trade with a short put, I just minus put for short, and then they'll go a long stock as well. Now they're both, this is kind of a bullish to neutral trade, the short put. Obviously, buying the stock is bullish, but sometimes they might begin with the short put and they might end with buying the stock. Now, you got to always remember there is additional risk anytime you're putting on additional positions, but there could be more insights here because we're still going flat. So say, for example, we started to break out here and, we have a downward sloping trend line. We break out, maybe retest or whatever. Maybe it looks more like a long stock at that point in time. So that could be a consideration. By the way, thanks so much for the votes in there. Love to get above 30, at least to get a good solid feel for what the total group might be thinking in general. Let's go into it. The trade tab right now. We'll take a look at those options right now. Now we could be looking at, I'm still going to use that October time frame here, and you'll see what we've got. Now, like I said, with volume, my gosh, open interest, super high. Volume on the stock, super high. That's 20,000 contracts. 31, almost 32 million shares already traded today on Intel. Today alone, I think we might have one of the biggest, maybe the second biggest volume, or I should say open interest put we might be looking at right there. Now it is only 37 cents though, so be mindful of that. Implied volatility a little bit higher here, but if we were to take a look at that, and oftentimes traders are looking at a delta range of 0.2 to about a 0.4. There's your delta column right there. Swing us on down. We got a 22. We got a 23. They're both very close. Again, that delta, what that measures is for every $1 increase in the price of the underlying stock, that option will move that range, in general, will move down or up. And in this case, down. You can see a minus in front of the deltas by the amount of the delta for every $1 increase in the stock. So let's do this. I'm going to go ahead and we'll look at the 23 is really quite tight, but the 20, we don't have a 2250. We got a 22, which is right about there. So not a ton, but it is an interesting way. And like I said, for those people that are looking to maybe try to buy stock at a lower price, so some people will do that with a short put as well. I try to get assigned that, but or potentially get assigned. I'm going to go ahead and do this. I'm going to do 2 contracts on this. At 37 right now, that spread is just so liquid. Love to see that. Confirm and send. We'll pull this guy up and we'll take a look at it. So the margin requirement, about 494 as it stands right now. The max profit, $74. Again, this could be the start of a position because prices are going down. We've done that in this class before. We put on a short put. We put on a short put spread initially. And when it starts to give us more signs, sometimes traders will shift to a long stock. Always be mindful of the risk. But there you go. I'm going to go ahead and put this trade on right now as we look at it. And there you have it. So it doesn't bring a ton. It's a low price stock, but a way to maybe generate potential income or the start of maybe the beginnings of a directional trade. Now, the one thing too, we'll finish on this trade here. But I threw this out here just to show you guys that, yeah, hey, technology, we hit a couple tech stocks today, CDNS, we looked at Intel. Tech has been holding pretty good in an anticipated interest rate environment. where it's expected to drop, where they're expected to cut rates. Technology, and this would fit in there really quite well too. Communication services, there's huge overlap in here. They tend to perform pretty well, but also sometimes those defensive type stocks, if the market sort of pull down, can do well. Look at healthcare, breaking above prior highs and flagging. Now we're looking at the S&P 500 sectors. I look at this very frequently in my class on Wednesday. I got a little bit of a deeper dive tomorrow for you on that class if you're interested in markets and sectors, where we do put trades on in this class too, big picture type trades around macro perspectives, with the trend, of course. But that's sort of a flag. Now, if I come over here, the last stock I wanted to highlight for our trading today would be Gilead Sciences. Now, this is just for a stock trade. Do you guys see the flagging formations over here too? Up, down. Okay, so how many times? Quite a few. Here we are again. We're just getting started here. Will it go up again or not? Let's set one up right now under the trade tab. I'm going to go ahead and just right click, buy custom OCO bracket. Now, with this OCO bracket, where might our target be? Well, remember, we have the T1 target right here. And we also have a T2, which is not going to be much higher above, actually, on this sort of a potential move. Still, though, what are we looking at to the T1 target? If we're looking at the high range, let me give it to you guys real quick. Got to use the diagonal line. I'll zoom in on it, too. I didn't zoom in that much. What's going on here? Okay, there we go. All right. So, yeah. So right here, up to the target range up top, and that's still about, let's see, about 6 points, a little bit higher for the for this extended move. I'd say we'd be up about probably in this range, maybe about 12 points or so. There is going to be a difference of a range. That put us to right around 123, though, very close to it. Now, in terms of a potential exit, below, if we don't run right here, you know, if this is, because that was a pretty big bar, we had some good volume here too, but we went sideways. Folks, if we begin to just dip here, some traders might just say, hey, let's keep this one a little bit tight, like right there. We don't maybe want to risk as much, you know, using a potential exit there with the stop at that level. So maybe that's the risk, but the reward could be either to here or here. I'll go with the 123, okay? But it could be very small relative to the reward. That is the risk versus reward, just giving you a range of some of the price ranges there, price zones, okay? That too might be like a, if I go over here real quick, watch this. ATR, double click, there's your ATR, average true range. We're looking at about a 2.5 points or so right there. Just about an ATR, look at that, it's so close to a 1 ATR. So we'll put the potential exit about 113.50. Okay, just want to get our numbers in there for our stop. 113.50, 50, and this is about a 123 range. We got to make sure that this is both good tail cancel, and we'll go ahead and put this guy in after we take a quick look at it. That's the buying power effect. So it's still, you know, we're back in the 100 range. That's a $100 stock, about $5,700. You've got that OCO bracket order in there, and we've got our time ranges. Let's go ahead and click on send so you can see it. There you go. There it is. So we bought this guy as a potential for a flag pattern. This was just our stock trade. We've been looking at options quite a bit today, folks, but that is the stock trade itself. All righty, folks. Smash that like button if you find value here. Good to have you all on board with us, folks. I see a survey in the chat. Appreciate the participation today. And also, yeah, thank you for participating in the poll as well. Thank you, Cam, so much for your help, everybody. We'll cut it off here, but look forward to future discussions with you. We'll keep an eye on these and see how they do unfold. Take care, all.